What's up, everyone? Well, I guess it's a double recap kind of day. When we last spoke, I was sitting at $59,000 on the day in the green. But after my recap this afternoon, I took a few more trades. And you know what? That's an exception, not the norm. But today called for it. We had some fantastic volatility this afternoon, not just in small cap stocks, but even in the overall market. So let's kind of set the stage and let me kind of break down how things ended up finishing today. And I want to take a moment to talk about the position of the overall market here, because I think we're at a very pivotal point, which is worth discussing. So the S&P 500 today actually closed slightly in the green. The NASDAQ closed in the green. The Dow Jones closed red, but not by a lot. Now, when I first sat down this morning, and actually last night, I was checking the S&P futures, and I saw that the Dow Jones futures were projecting a 4% drop. They were already down 4% in futures markets. So I was like, oh my gosh, we're going to have another, maybe big red day on Monday. Now, I wasn't worried about my ability to find some opportunity to make money in that volatility, but at the same time, no one wants to see the stock market crashing. In fact, over the weekend, there was a lot of talk on social media about what Monday was going to look like, the news, everyone else. Jim Cramer came out and said, Black Monday 1987, the market dropped 22% in a single day. That's what's going to happen. So I knew at that point the market was going to go up today. I knew for sure, the laws of inverse Cramer, it was going to be a green day. I just don't know by how much it was going to be green. But in all truth, I wasn't sure. And over the weekend, I saw the billionaire hedge fund manager, Bill Ackman, calling, on Trump to do a 90-day pause on the tariffs. And then this morning, and this is incredible. This morning, I sat down, I saw that the market was down quite a bit. And at the open, we had this continued sell-off. So the market at that point, Dow Jones was down about 1,500 points. We were right basically at the low of day. And then all of a sudden, it ripped up about 8% intraday from low to high, 8% swing, as rumors were circulating that the White House was going to proceed with a 90-day pause. So the market just whips back up. Now, it stayed up there for a few minutes before it came back down as the White House responded and said, no, that's not true. That's fake news. There's no pause on the tariffs. So the market comes back down. But meanwhile, there was news out of Europe that Europe is willing to entertain a zero tariff relationship with the United States. And then this afternoon, the Israeli prime minister was speaking with Trump, and he said that Israel wants to also proceed with a zero tariff relationship with the United States. So now this kind of changes the position a little bit. And rather than the market going all the way back to the lows, it's actually kind of based out here a little bit. In fact, today was the highest volume day in the S&P 500 since the pandemic. I mean, it's unbelievable the amount of volume we saw today. Over 240 million shares of volume. There was a headline that this was the other day, but retail investors buy stocks at the largest level in 10 years, according to JP Morgan. Retail traders buying the dip. So I think that's very interesting, and it's good to see. It's good to see that retail traders are buying the dip, because what typically happens is retail traders are the ones who panic and sell, and and who buys the shares? It's the billionaire hedge funds who know history and understand that market corrections happen all the time. Bear markets happen every 4 or 5 years on average, and that they recover. So an opportunity to buy from someone who's panic selling at a discounted rate, long-term is typically a good move. Now, there could be more pain before we get a recovery, but nonetheless, the typical correction lasts about 4 months. The typical correction, we've had 56 of them in the last 100 years. So you get a correction, which is 10% or more, basically every other year. A bear market where the market drops 20% off the highs, we get those once every 4 to 5 years. We've had 22 in the last 100 years. So they happen regularly. Now, they typically take about 9 months before the market recovers. And today we did cross technically into bear market territory. But then we kind of jumped back out of it. If we look at the percentage down today, or in total from the peak, we were at 21.4%. So just into bear market territory today. But then we closed just back sort of inside it. I don't know if that counts as officially entering a bear market. We're down 17% right now off the highs. I think that we know that we've been in a world where the definition of recession and the definition of bear market is fluid. It kind of moves to be just outside whatever we currently are at. But nonetheless, this was a pretty intense day in the market. So big swings in indices, big swings in underlying stocks, no question about it. And then we had JNVR this afternoon. Unbelievable. This is absolutely wild. US company, small cap company that goes from $4 a share to 48 bucks in one day, over 1,000%. This is intense. So this was the condition of the overall market. Now, I told you when I finished my my recap earlier today that I didn't think JNVR was going to work for me because now it was getting a little too expensive. We were having bigger spreads, and that was correct. So when I came back, I did my recap, and then I had a couple meetings. I had some things I was working on, and so I was sort of watching charts. I was watching JNVR, and my take on it was that it just presented too much risk. So this morning, it curls back up right here. This is when I was doing my recap. Hit this level of 21 and then sold off, halted down a couple times. And it rallies back up right here. And I thought, nah, I don't know if I can trade this. You've got this resistance level here. I pulled it up when it was around 24 and I saw a spread of 22.30 by 24, a 2-point spread. And I was like, no, I can't trade that. That's outrageous. Even 1,000 shares. To risk $2 a share, I need to make $4 a share to justify the 2-to-1 ratio. I'm just not going to get it at this point. So, it's kind of like buying Bitcoin at its current price. You're not going to get a 10x return anytime soon. But JNVR down, at $4, $5, $6 a share, 6x. I mean, it starts to be within reach. And so anyways, it ends up squeezing up here. I saw the spreads. I said, nope, I can't trade it. And then it drops back down here. And during this period of going sideways, lighter volume, bigger spreads. And I was like, nope, can't touch that. And then it ends up pulling away, halting up right here, dip and rip, pull back, and a rip up to 47. And although that was tempting, the spreads kept me out of it. I just know that trading stocks in that price range for me carry too much risk. So this is what I said. All right, clearly we're in a market where we're seeing huge moves. So all I've got to do is wait for the next one. When's the next one going to come around? And my thinking was that it probably wouldn't be until after hours, breaking news at 4 p.m. So I decided to wait until 4 p.m. So I had some things to do, and so I left for a little while. Then I came back at about 3:45. I sat down, and when I sat down, what scanner did I pull up? So I go into my scans, and I pulled up my after hours top gainer scanner. And of course, I had my high day momentum scanner right here as well. And we've got SOBR on the scans, and we have SVRE. So SVRE, I pull it up, and the first thing I see is, oh, it's an Israeli company. So I'm like, initially, well, that doesn't really fit the profile, right? This morning, what stocks were working? They were US companies, the domestic first kind of policy, right? So we were seeing US small cap companies squeezing. But then remember, this afternoon, there was that press conference and Q&A with the Prime Minister of Israel saying they want to proceed with a zero tariff, deal. I mean, it's not negotiated, I guess, in total, but that sounds like a good intention. So now an Israeli stock popping up, initially I wasn't sure, but man, this thing squeezed. So this stock ended up going from $3.40 to $6.80. I mean, this thing ripped. So all of a sudden it's up 79%, 100%, 130%, 140%, 146%. I couldn't believe it in a matter of minutes. So I went ahead and jumped on SRVE. So this is how I traded this one. This ended up hitting a high right here of about 651. It dips down. As it starts to curl back up, I got in right here on that micro pullback, and I was looking for the squeeze back up to the high. So I got a trade on that of $2,879.92, which puts me up $62,390.62 on the day. Was it really worth staying around for this move? No, probably not. I mean, I had things I was doing on the computer anyways, but I got an extra, $2,800 on it. Now, when SOBR popped up, this one I said, no. See, I've traded this one before, and I know that this one's tricky. So this one I said, I'm not trusting it. So SOBR, even though I said I wouldn't trade it, ends up going from 560 all the way to 860. So it goes up $3 a share in any case. 5,000 shares could have made $15,000 on that. And that's kind of the risk to reward that I was looking for. A stock that had the potential to go up $3 to $5 a share, where where it's starting at, $5 to $8. So we're talking about a nice 50 to 70% move, maybe higher. That's where I can do really well, even with relatively small size and not a lot of money on the table. 3 to 5,000 shares or $3 to $5 a share, even with that size on something like JNVR, it's just too expensive. I mean, you could make a huge mistake, catch a huge loss with those spreads, and it's not worth it. So that was kind of the way I approached trading this afternoon. I was waiting for a fresh stock. But I also recognize that sometimes when you have something like JNVR that goes up 1,000%, attention will still be focused on this stock. So you could have traders that are looking to trade, this one into tomorrow. But for me, just like AREB, it's going to be too expensive. So I'd really rather not trade this one anymore and instead wait for the next one, like the next SOBR or the next SVRE, or maybe one of those two tomorrow, but probably not SOBR. And ride the momentum on something that's more within my price range. Because here's what I learned. When I did small account challenges, I'd fund an account with $500 to $1,000. I would typically use a broker that offered 4 to 6 times leverage. So I'd have $4,000 to $6,000 of buying power. And I always focused on trading something where I could buy at least 1,000 shares, where I could afford 1,000 shares. And I would jump in with 1,000 shares and I'd try to get out as quick as I could. Get in, get out. So my risk typically 1,000 shares on a stock between, anything really under $6 a share. If you've got 6,000 in buying power, you could buy 1,000 shares. So I'm thinking 1,000 shares of a $5 stock, it's 5,000 on the line. I'm going to get in at 5, stop $4.90. I'm risking $100. So that's 10% of my account if it's $1,000. And my target, basically immediately looking for 20 cents a share. And if it squeezes up to 50 cents a share and I can pull out $500, that's awesome. And I've done that so many times. That's my small account approach. Looking for lower price stocks where I can get enough size to still do well on, 15, 20, 30 cents. And if you get more, then that's even better. And trying not to sell until I see a valid exit indicator. So we're in a market right now where we're certainly seeing heightened momentum. And the amazing thing is, the overall market, well, today it bounced up a bit, but the overall market's down 17% and I'm cruising on the month. I'm doing great, and it's because I'm not exposed to the overnight risk. I don't have to worry about gaps down. The overall market could be dropping, but there's still pockets of opportunity. So during the pandemic, there were obviously a handful of stocks that were skyrocketing as the overall market was dropping. Now, what stocks tanked during the pandemic? Cruise line stocks, they were totally screwed, right? Airline stocks, no one wants to fly. No one wants to be on a small airplane during the pandemic, right? And not a small airplane, any size airplane. No one wants to be in a confined space with other people that might be sick. So all of a sudden, we saw a lot of these sectors dropping. But then what companies went up? Zoom, DocuSign, Etsy, online shopping, right? So there were pockets not only of safety, there were pockets that did exceptionally well. You talk about the 2008 recession. We had a full-on recession in the market, financial crisis, right? Brought the economy to its knees. But you know what? There are some companies that did very well during that period of time. What companies? McDonald's, Dollar General, Dollar Tree, Walmart, right? So you got to think in any market, there are opportunities. And so right now we're being presented with some very unique opportunities relative to the current, political and economic situation that we're in. And so it's about kind of trying to find that silver lining. And the nice thing about being a trader is that you're cash at night. So you don't have to worry about all of a sudden something crazy happening overnight and you get this massive drop. Now, what I do to mitigate my risk is I don't need to keep all this money in cash, so I put it in fixed income. So for me right now, so just last year, for example, I started the year with $116,000 in my account. I produced $1.8 million of total profit. So I don't need a lot of money in my account to do really well. Now, I'll remind you as always, my results aren't typical. I've been doing this for a long time, so I'm just gonna say that. But what I do with all the extra profit that I'm making, it's in a Roth IRA, and I just invest it long term, but I really focus on fixed income. That way, I just get that slow, steady return. Because I'm getting the big returns on my day trading account, but I don't wanna grow that day trading account, put it all into equities, and then watch it drop 30%. And that's the problem. In the equities market, you put your money into the US equities market, it's very volatile. It didn't used to be as volatile as it's been in the last couple decades, but it's gotten to this level where, it's like you can hold on and, you're on the ride. But for me, I don't feel comfortable with that. So when I see the market tanking, I mean, I don't love seeing that, but I'm also not thinking, wow, my life savings is dropping because I've diversified my risk. Now, a lot of you guys do that in different ways as well. You might buy real estate instead of putting your money in the market, and that's fine. If you're already in the market trading every single day, it's not always a good idea to have all your eggs in one basket. So nonetheless, right now, we're really in a very interesting place. I don't know what the next 2 weeks are going to hold for us. We may see, depends on news headlines, depends what China does. Is this going to go higher with the tariffs with China? It might. That's going to create, some problems there. So I don't know what the next couple weeks hold, in store for us. But what I can tell you is that I'm going to keep showing up every single day. And I'm going to keep looking for those little pockets of opportunity, those little pockets of safety. And if we continue to see the level of volatility that we had today, man, I'm excited. So let me remind you guys, our anniversary sales here at Warrior Trading are ending tomorrow. And when you join the Warrior Pro Special, which gives you a full year of access to my live audio video broadcast, plus you get access to our scanners and our simulator, charts, all that stuff, you get a 7-day money-back guarantee. So you can actually trade side by side with me for the next week and see what it's like to be a member of the community. All right, so I hope you guys take the leap. I'm gonna put a link at the end of this episode right here to the episode I uploaded over the weekend about my 3 bear market strategies. One for long-term investing, where I'm gonna be more conservative, swing trading, and then of course, day trading. I'm also gonna put a link to a couple other episodes I think you guys will enjoy on technical analysis and on how to start day trading in 2025. So thank you guys as always for tuning in. For the second recap, let me remind you, trading is risky. My results aren't typical, so please manage your risk, take it slow, and I'll see you guys live streaming tomorrow at 7 a.m. Eastern. All right, I'll see you then.